Good morning, good afternoon, good evening, everyone. Thank you for joining us today. I hope you and your families are doing well. My name is Stephen Rushmore. I'm the president and CEO of HVS, and this is not only our first global webinar for the year, but we're also celebrating our 40th anniversary at HVS. We've come a long way since 40 years ago, and you may not realize I've actually been there since the very beginning when my father started the company out of a small Mineola office in 1980. It's been quite a journey since then. And I'd just like to take this time to thank our current staff, our alumni, our loyal clients, and the industry as a whole for just being such an incredible journey this past 40 years. We've really grown a lot, thanks to you. It's a privilege and honor to be leading this company and for many years to come. Now, before we begin, I'd like to share a couple points about this particular webinar. We want this to be as conversational and as unscripted as possible, but we are going to have a couple PowerPoint slides at the beginning to really set the current context. But the remaining hour will be a moderated panelist discussion. Secondly, ahead of this webinar, you had an opportunity to submit questions when you registered, and thank you for submitting those. Our moderator has curated this program based on that feedback. You also have another opportunity right now and for the remaining part of the hour to ask additional questions in the Q&A box, and we will be monitoring those. Now, we won't have a chance to answer all of your questions over the next hour. However, unlike other webinars that you've probably attended, we are going to make a commitment to follow up with you directly using the contact information you provided if we didn't have time to address your question sometime over the next couple weeks. So without further ado, I'd like to hand over to our moderator, Russell Kett, HVS Chairman of Europe. Russell, welcome.
Thank you, Stephen. Good morning, good afternoon, good evening, good night, whatever time of the day it is for you, you're most welcome, and we're delighted to have you with us. I'm going to, if you don't mind, I'm going to share my screen with you because as Stephen indicated, unfortunately, the first few minutes at least are going to be death by PowerPoint. So if you can see that, that's great. I'll kick it off from here. You've heard from Stephen, now you hear from me. I'd like to welcome you all today. Thank you so much for joining us. Some 3,500 people have registered. 121 countries are represented. You can see the breakdown on the chart. I should point out that the seminar is being recorded and that if you or your colleagues who weren't able to join us want to revisit it, you'll have the opportunity as well. As Stephen said, please continue to ask questions via the Q&A button on your screens, and we will address those that we can't deal with during the actual seminar itself. I'm going to deal with, if I may, the answers to the polling questions that some of you may have already contributed to. We asked you two questions. What do you consider to be the single biggest challenge for the hospitality industry in your region? And we gave you 5 options: increased costs, access to finance, getting international visitors back, getting your corporate MICE business back, and guests preferring self-contained accommodations. And the second question was, in light of the current hospitality environment, what is your preferred investment strategy? We gave you 4 options: hold, buy, hold and buy, or sell. So here are the results of our live poll. And 2023 was most favored for both questions. So anticipating RevPAR to come back, 51% of you felt that that was going to be in 2023. And you can see either side of that year, some were a bit more optimistic. 23% of you felt it would be before then. 23% of you felt it was going to be in 2024. And as far as hotel values to return to their 2019 level, just over a third of you felt that that was going to be by 2023. Slightly less, 28%, feel that it's going to take until 24. And some 16% of you felt that it was going to be in 2025 or later. There are a few optimists in our audience. It's delightful to see you. 20% of you felt that it would either be in 2021 or 2022. So that's good news. Now I'd like you to focus, if I may, on the global and regional hotel performance. But before we do, we're going to ask you a couple more questions. And if all this works well, my colleague Lizette is going to put those questions up and ask for your votes on this. So the biggest challenge, we'd like you to indicate what you think is the single biggest challenge for the hospitality industry in your region. Is it increased costs, lower profitability and weak cash flow? Is it access to finance? Is it getting international visitors back, getting corporate and meeting and group business back, guests preferring self-contained accommodation? So what is your biggest challenge? What do you think that's going to be? Please vote now. And as soon as you've voted, we should get the instantaneous results. And if you haven't got any patience like me, you'll be twiddling your thumbs by now. Okay, Lizette, have we got the answers?
We are at 74%. So
Well,
just say the word and I will show the results.
I think we'll show what 3/4 of our audience feel, because some of them might not want to participate. So our biggest single challenge, nearly 40% of you, is getting corporate and meeting and group business back. Interesting. Next one is getting international visitors back. And just over 20% of you are concerned about increased costs. So that's pretty clear as to what our audience feels today. Thank you, Lizette. Can we take our next question? And that will be our final question. I want you to vote on what your preferred investment strategy is going to be in light of the hospitality environment as it is at the moment. Are you going to hold? Are you going to buy? Are you going to hold and buy? Or are you going to sell? Please vote now. And because we don't have any on-hold music, unless you vote quickly, I'm going to have to sing something. So please vote now. Okay, Lizette, that should be enough time. How are we doing? So most of you are going to hold and buy, just under half of you. A third of you are going to hold, 16% are going to buy, only 4% going to sell. So just remember that as we go through our Q&A, because that might prove to be an interesting poll. So ladies and gentlemen, I'm going to focus initially on the global and regional hotel performance. And I thought I'd share some slides with you as to what the HVS view is in answering questions as to when we feel occupancy is going to return. And you can see that by region. We've got 5 different regions represented by the speakers today. And the red line, as you can see, is Americas, blue line, Asia Pacific, green line is Europe, yellow line is Middle East, and the black line is India. And you can see there where the occupancy was in 2019 and where in your region we expect occupancy to return to their previous levels. And most of the countries hit that in 22, 23, or 24. So those are the HVS projections to compare with where you thought occupancy would be. And we think RevPAR is going to return to those 2019 levels by somewhere between 23 and 25. And you can see where your region intersects that line that has a 1 by it. That's the level from 2019. And where your colored line intersects is where we feel we're going to achieve those levels again in whichever year is coming through. And finally, our view is that values are going to be mainly back to where they were in 2023 or 2024, with the Middle East, that yellow line, dragging its feet a little bit and taking somewhat longer. So that's our thought as to where the business is going to be over the next few years. And to answer your questions and to talk about succeeding in today's hospitality environment, giving their insights and solutions on hotel performance, valuations, and transactions. It's my pleasure to welcome Rod Clough, the President of the Americas, Hock Yan Chi, President of Asia, Charles Human, President of Europe, Hala Matar Shafani, the President of Middle East and Africa, Mandeep Lambda, the President of South Asia. He's the most easily identified of all our panelists, as you will see as I now stop sharing my screen and we go to our wonderful video cameras. Everybody's working, all their sound is switched on. And so we're going to take questions initially on hotel performance. And guys, in the slides that I showed you earlier regarding occupancy, regarding RevPAR, we indicated when you expect performance in your respective region to return to 2019 levels. So I'd like you to comment initially on what type of recovery are you anticipating in your region? Perhaps which segments are expected to be at the leading edge? So answer my question, and I'm going to go around the world. I'm going to start with the people who are about to go to bed, with Hock over there in Singapore, Asia Pacific. How has your projection taken shape? What sort of a recovery are you expecting?
Out here in the Asia Pacific, we do believe that it will be a slower 2021, and with a recovery in 2022 to 23. So you'll see most of the RevPAR actually probably getting back to the 18 and 19 levels in 23, 24.
Okay.
And,
go ahead.
Yes, and which segment? We anticipate that it's likely to be leisure and the short-haul corporate travel.
Okay, so moving a little bit westward, Mandeep, over there in the Indian subcontinent. What type of recovery are you anticipating?
What we think will happen in India is that we see occupancies coming back to pre-COVID levels around the third quarter of 2022. And we see RevPARs returning around the second quarter of 2023 is what our projections are. And in terms of the segments, I think similar to what Hock said, it's going to be leisure and it's going to be the mid-management corporate short-haul travel is really what I think in the segments, and the mid-market hotels is what's going to lead the recovery, is our sense in India.
Okay, thank you very much. Hala, you don't have too many mid-market hotels in your part of the world, do you? But are they going to be leading the charge as far as you're concerned?
I mean, they're definitely developing further, but if you allow me, Russell, I just don't want to generalize because I'd like to talk about Africa and the Middle East when we look at recovery. I know on the slides we didn't mention Africa. Perhaps the good news is that I am expecting that Africa has the potential to recover ahead of the Middle East. I'm not suggesting the Middle East is not going to recover, but exactly to what the poll has indicated, 70% are looking or concerned with the corporate market, but also the international market. And the reason I'm saying that is because Africa is so dependent on the international market, therefore recovery is going to be really tied down to air traffic and connectivity, whereas the Middle East and only very few cities in the Middle East have managed to diversify. So they're very heavy on the corporate segment. And this is where I think the challenge is going to be even harder in terms of the recovery. Expectation-wise is 24, 25, because again, factoring in travel with the corporate segment, it will take some time before we see recovery across both continents.
Terrific. Charles, from a European perspective, same question, type of recovery, any segments, but are there any underlying economic or related factors that are baked into the European projections as well?
Hi, everyone. Well, I guess the recovery is underway in a sense, and as with other regions and as with our expectation, leisure has led the way with drive-to or overland destinations having a very strong summer. So places like coastal resorts of the UK, Germany, alpine destinations have actually had a stronger summer than possibly ever before, and forward bookings are very strong. So that's certainly where the recovery has begun, but it's stop-start with all of the travel restrictions being reimposed. It's a challenging time for hotels. And then next, we like other regions, we expect regional commercial markets to start to pick up, and I think that's what was already being seen to some extent in Germany, with secondary markets seeing pretty decent levels of occupancy so far. And then the big challenge in Europe is the gateway cities with long haul business and leisure and the meeting segment. We'll probably get onto it, but I'm sitting here in London, and London is a shadow of its former self today, and it's a challenge as to how we get business back into hotels of London and Paris and other great cities.
Indeed. Rod, bringing up the rear, but nonetheless representing in your region somewhere over half the number of people on this call. So they're all hanging on your every word.
Great. Thank you, Russell. I'll say I don't want to repeat what was already said. A lot of that does carry through to the Americas. I will note that we have a couple of really tough quarters coming up, the fourth and the first quarter. And without that leisure boost in the numbers coming up for those two quarters, I think we're going to be in for a tough haul. So we just need to dig our heels in and get through that period here, and then look forward to once the mass inoculation occurs and the vaccines are distributed, an unleashing of demand to a certain extent next summer, moving into a nice recovery period in the fall of 2021 and the spring of 2022, which really formulates the boost for that checkmark recovery that you saw for the Americas. The critical point with that recovery to remember is that it's not really going to kick in until next summer. And then once that does end up happening, I think things will be looking good. There's a lot of pent-up demand that we're going to be benefiting from, but we just have to get through the next 6 months. It's going to be a tough time.
Excellent. So guys, you mentioned vaccine. To what extent would the availability of a reliable vaccine help to accelerate the speed of recovery that we're forecasting? Hock, do you want to give an indication of that?
Yes, Russell, I think vaccine is really important for people to really feel safe before they can really start the travel. I think other than vaccine, there are other things such as travel restrictions, borders opening, which are actually very critical, right? Especially for all the markets in Asia Pacific.
Okay, from an Indian perspective, Mandeep?
Oh, absolutely, Russell. I think it's the vaccine. There are two things which are going to make the difference to bring confidence back into travel. The obvious one is the vaccine, which everyone is expecting to have a vaccine by the end of the year. And I think by around the middle of next year, we anticipate that there'll be a reasonable number of people who will be inoculated, and therefore travel can start happening. The second thing is that I think by the middle of next year, the medical fraternity of the world would have dealt with this pandemic for a reasonably long period of time to have got a better fix on it. I do think that the medical treatment regime will get fairly standardized. The mortality rate of this disease will come down substantially because we will have a better handle on how to treat patients, as we are learning almost every day from what is happening with the disease spreading. So I think these are the two things which are likely to happen around the middle of next year, which I think should really start spiraling the travel and build the confidence in people to get back to sort of the normal activities that all hoteliers are looking forward to.
Okay, thank you. Hello, I was going to ask you the same question about the impact of a vaccine, but when you're answering that, could you also have in mind a couple of questions that have come through from our distinguished members of our audience who are asking, why is it going to take so long for your region to get back to where it was?
Great. So that ties in exactly with the response I had on the vaccine, Russell. I mean, we've asked travelers in Africa and the Middle East whether the availability of the vaccine will mean a faster recovery. Now, some of them obviously were very confident, but then they did indicate that this will result in them taking a leisure trip. So I guess what I'm trying to say, I'm not suggesting that the availability of vaccine will not help the recovery, but I just want to be also very careful with how we're estimating the comeback of demand. Again, in those corporate markets, the question is not going to just be tied down to the confidence of the traveler. It's going to be a function of whether these companies will have the budget and therefore will send people on corporate and meeting an incentive. And that probably answers the question in terms of long recovery. Now, we've seen in Saudi Arabia, for example, and in Egypt specifically, and I want to mention these two, because they're very similar to what Rod said or Charles said. In market where you have domestic tourism, leisure business has picked up quite a bit this summer, and it's looking more positive. So I'm more concerned really with that particular segment, which is the corporate and the MICE business, that will take time to recover, be it on account of the availability of the vaccine, but more importantly as well, the economic impact and what companies will be able to spend on actually corporate travel.
Charles, anything to add from Europe?
I agree with what everyone said. I mean, I agree with Rod in that there will be a turning point in this situation, and once we hit it, whatever it is, whether it's a vaccine or just the penny dropping that this isn't quite as serious as it was previously, then I think the recovery will be quick. But I agree with what Hala has just said, that an effective vaccine will have an immediate effect on the leisure market, but there's some change of habits in the corporate market, and there are cash flow issues within companies, and I think the recovery in the corporate segment and the meeting segment will be more drawn out.
Right. Rod, have you got anything to add to that?
I'll just add that across the Americas, we have so many countries, and then in the United States, the states are really ruling the day in terms of the regulations as to meeting group sizes and whether people can even travel, or in some countries in South America, hotels can't even open. And so in tandem with the vaccinations and the mass inoculation, which is just a feat that's going to take time, even once we have a vaccine released, then all of the countries on their own timelines have to release the hotel industry to basically function. And so as we all know, governments can move at their own pace, and we don't really have control over that. So we just need to be patient and let all of that play out. And that is the additional time that's needed beyond just the release of a vaccine, should it be late this year.
Okay, Hala has an important point.
Yeah, no, if you just allow me, I just wanted to add, because I guess I've missed also to mention the special events in the Middle East. Everyone is banking on recovery on account of Expo 2020. So that would be a major recovery potential for the UAE, but also Qatar. World Cup in 2022, and in line also with the Vision 2030. So these will certainly help. And if there is a recovery, this is going to be an account of these events. But when we look at the next 3 to 4 years and on the average of the region, it is assumed to be a slower recovery for the entire region.
Okay.
Just wanted to clarify.
I'm just going to pick up on a couple of questions that I've noticed coming through the Q&A function, and thank you for all of that. Keep them coming. First of all, we are going to send the slides round afterwards. Don't worry about that. Secondly, Iceland is part of Europe, but as England proved in their football match the other night, not a very significant country for European football. Unfortunately, England didn't do anything other than disgrace themselves. A very quick question before I move on from hotel performance and on to valuations, because I suspect most of you are quite keen to get to hear what we say about it. So quick question to each of our panel. Hock, first of all, Are hotels having to discount unrealistically in order to gain occupancy in your region? You could say yes or no, but you could add a sentence or two.
Actually, the answer is no, because purely, even if you discount, there's not much occupancy. And actually, on the contrary, we do notice in some of the markets in the Asia Pacific that, in fact, the ADRs are even much higher than pre-COVID in some of the markets, or at least similar. So there's not much discounting around here.
So in terms of RevPAR recovery, Mandeep, if I'm not mistaken, looking at the data that you provided, you're doing a slower start, but you're getting there much faster. Why?
Primarily, I think, Russell, that we have a less steeper hill to climb. India has been sort of performing below its potential. And our RevPARs have been amongst the lowest globally. So we have a lesser hill to climb, firstly. The second thing is that I think in India, one of the remarkable things is our domestic tourism. And if you just look at the quick numbers, our international arrivals are just under 11 million. And our domestic tourism is about 150x of that. So we have over 1,800 million domestic visits that happen or take place in the country. So our knights in shining armor in India are going to be the domestic traveler, and everyone is going to start focusing on them like they have never done in the past. And I think that is where the recovery is going to come. And I think the second part of our recovery that I see is that we have an outbound market which was valued at about 22 billion last year. And I think those people who are not going to be able to travel overseas are going to start spending in the leisure markets in India. So we think, coupled with all of this, we see a quicker recovery happening.
Okay, I'm going to encourage everyone to take a little less time in answering. So, Hala, slightly longer question, but a short answer, hopefully. So I want to focus on RevPAR and particularly GOPAR, GOP per available room, and how that's been affecting in your region, the hotel performance. Do you think we might see TRevPAR and GOPAR overtaking RevPAR as the key performance indicator in your part of the world?
Well, definitely in the Middle East, we are already looking at GOPAR, and this answers your earlier question about discounting heavily. What hotels are currently doing, they're discounting room rate with the hope that they're going to get the guests, and the guests will then tend to spend on F&B and spa and other components. Now, with most of the hotels, I wouldn't want to generalize, but at least in the UAE and other GCC countries, the rooms revenue is roughly around 50%. So you have a good split between rooms and non-rooms. And therefore, GOPAR is becoming a much more of an indicator that we follow, at least when we're looking to maximize the value and the returns.
Okay, I'm going to use the B word, and I apologize unreservedly to our European watchers and UK watchers in particular. Charles, how might Brexit affect the recovery of the UK's hotel sector? Are we going to see an impact both on the UK business and on European business as a result of Brexit taking effect at the end of this year?
Well, I suppose the irony of the situation is that hotels' biggest concern about Brexit was that labour shortages caused by immigration rules into the UK would limit EU labour, which was a big source for the for UK hotels, and would therefore put pressure on payroll. With the massive unemployment we're now seeing across the country, that issue has now gone away, unfortunately in many ways. So I suppose the big impact of Brexit is now kind of gone. Amazingly, we seem to be heading towards yet again a no deal or a no trade deal Brexit, which, if it happens, I suspect at the 11th hour a deal will be somehow cobbled together. But if it does happen, I think that, I can't say I'm an expert, but that presumably will put tariffs on food being imported into this country, which in turn would decrease margins within hotels. But hopefully that will go away. There will be a deal. But I think in the overall scheme of things, Brexit is really a drop in the ocean compared to the coronavirus crisis.
Okay, so all of those points, Rod, add up to what as far as the Americas are concerned, and any aspect of what any of the colleagues of ours has mentioned, how does that affect what you're going to experience in the Americas? Please round up this section of our discussion.
Well, I think in the Americas, we're anxious to get back to traveling. I think, you know, raise your hand on this call if you're tired of Zoom meetings, if you're tired of the conference call. Much like our children want to get back to school and see their friends, we as adults, we want to do the same thing. We want to be going to meetings, conventions. We want to be traveling and seeing our employees. There's just a growing pent-up demand that is going to be unleashed, you know, once we all feel safe to travel and the states say that we're able to do so. So I'm looking forward to that. I'm looking forward to a very busy summer and getting back to the world of traveling. It's so much of a part of who we are now as a society. Travel is embedded in our DNA, and that's simply not going to change. If anything, it's just getting stronger, and that desire to travel is getting stronger.
Excellent. Well, thanks, guys. I'm going to move on, and I'm going to start to talk about valuations, because that's the second prong of our focus this afternoon, this morning, this evening, this night. Given where HVS is in terms of hotels and valuing hotels, what's the most appropriate methodology for valuing hotels at this time? And how does this vary according to each region, or does it vary according to each region that you will represent? So I'm going to pick an individual to start with, and then work from that point forwards or backwards. Charles, what's the most appropriate valuation methodology at this time?
Same as always, in my view. I think in our view collectively, which is DCF. I think particularly now it's important that values are based on a forward-looking approach, with detailed, explicit assumptions of performance, cash flow forecast, and parameters. So we're as always, it's our primary approach to value, particularly in light of the lack of transaction evidence that exists out there today. And in terms of how we're approaching it, really the biggest impact on our numbers today is within the forecast, and that we're building in a recovery. We're making assumptions about that recovery, and to the parameters themselves, I think probably the biggest change we're making is reflecting the lack of availability of debt, which is impacting our discount rate. But otherwise, little change.
Little change for you as well, Rod?
Yeah, I would just add to that and say that you want to be careful when you're looking at sales right now. And in this point in the cycle, they may be representing liquidation value and not market value. And so be cautious. So another reason to really lean into the DCF and not perhaps lean in so much to the sales comparison approach.
Hawk, is that the same advice from your region?
Yes, actually not very much different from Charles and Rod. DCF is still the preferred method in this part of the world. And as what Charles has said, you know, we are really building in our projections. We are looking into, you know, if there are any restrictions that will be lifted, any availability of flights for international travel that can come in. So we are making all these adjustments in our cash flow. And that actually really, it's a very robust kind of work that we are working on. And also similar to what Rod has said, you know, got to be careful on the sales transactions. There are not many actually in Asia that have been concluded this year. Those that have been concluded are really transactions that started from last year. So we have not really seen any distressed sales at the moment, but doesn't mean there won't be some months down the road.
So, Hala, from your perspective in the Middle East, how do you expect cap rates to change over the next few years, maybe even over the next 10 years?
So Russell, specifically, again, I think here we're looking at the potential value of these assets. And in the Middle East, I would probably say we've always had a challenge with what we still apply and use, being the DCF approach versus the development cost approach. And I'm bringing this up to say that nothing has changed. We're still looking at valuations the way we used to. And even buyers are factoring in this crisis and potentially the recovery. I would say at least the sophisticated buyers. But then again, in the absence of transactions, and it's not just because of the crisis, I mean, even in the last 3 years, we only had a handful on account of the disconnect between the income potential of these assets when built, the over-specification of these assets, and also looking at the development cost, which often is not necessarily aligned with what the market potential is. So on the real deals and the real opportunities, those that have transacted, they actually transacted at a very similar market price to what our valuations have suggested.
Okay, and just to finish on this question, Mandeep, from your region of the world.
Clearly, I think the DCF continues to be the gold standard. I don't think there is any other methodology which has the ability to capture all the nuances that you need to capture in a valuation exercise. In India, because the transaction market is pretty nascent, we don't have any comparable sales data in most cases. And replacement cost doesn't necessarily work because land in India is valued very differently from most parts of the world. And therefore, we continue to be absolutely confident about the discounted cash flow.
Okay, so one of our distinguished audience has asked a question that's how would we underwrite a big box convention hotel valuation at this time, or in an urban or central business district hotel that is affected by international travel and so forth? So I'm going to get a round is in your country than anybody else in the world has. How are we doing that?
That's to me, right? Your audio cut out just a little bit. So what is what's critical with the big box, because each market functions a little bit differently. Some markets are a little bit more open than others, and they've been able to bring in some smaller group business to help fill some rooms if they're open. Is to have a very intimate knowledge of what's happening within the local market. How are local companies meeting? Are they meeting at all? And then really tie into the future group bookings of that big box hotel and where have they been moved to, what months have they been moved to, and really have a complete understanding of what's on their books when you're doing the forecast over the next 2 years. And then once those restrictions are lifted and the masses are ready to travel and get back out to those meetings, then you will see that uptick. The smaller limited service economy extended stay hotels are going to be back next year. The big box convention hotel, it's going to take towards that further edge to get the group pickup back, to get people back, get all of those rooms filled. But that's when the real understanding of the book, what's on the books, understanding that the group pickup may not be quite as much as the meeting planner hopes it will be for the next couple of years. And then 3 to 4 years out, we're back in business and things should be really getting back to normal.
I'm just dotting around the panel. Mandeep, come back to us on any aspect of what's changed in your parameters, whether it's cap rates, whether it's terminal cap rates, equity yields, and so forth. What parameters adjustment have you done in the valuations that you're currently producing?
Is that to me too? I'm sorry.
No, that was to Mandeep. I'm sorry.
Okay, sorry.
If my
Sorry,
sound
Ross.
is screwing, I apologize.
Yeah, you're
Okay.
I could
Smile and make the best use of the technology.
So I think cap rates, because of the increased risk due to the COVID impact, in the short term, we'll see some increase. But largely, I think terminal cap rates over a longer period of time will come back to normal. And actually, in the Indian context, we're going to see cap rates actually coming down over a 10-year period. So as of now, I think that there will be, on the discount rates, we're seeing no changes because the interest rates have dropped considerably while equity has gone up a little. So no changes on the discount rates as of now. On cap rates, some changes in the short term on increased cap rates because of the risk. Long term, more or less similar. If anything, they will come down.
Okay. Hawk, I'm just going to turn to you briefly. Do you get involved in any airport hotels? What's the future of the airport hotel in your region, for example?
I think the airport hotels in the region probably would see more business than before. I think because of the short haul, the anticipation that the short haul travel will return faster, and the fact that probably people might feel more safe if they stay closer to the airport in the event that they need to do a quick getaway in case there are certain other restrictions that will come on. So I do believe that the airport hotel would have a good place in the next couple of years ahead.
Okay, good to know. And from your perspective, Hala, how do you feel perceived at the moment? Are we at the risk of reacting, or are we at the risk of reacting? Right.
Sorry, Russell, I couldn't hear any of that.
That's a blow. So, I'll try again. In the current environment, are we at the risk of overreacting, reacting? Do you think we're getting it right?
If I heard you right, you're asking if we're overreacting or underreacting or getting it right. Is that the question?
That's right.
I think initially we really needed to understand how long this will be there for, and there was potentially what we could describe as an overreaction. Since then, I think we are just reacting as we should. And when I say we, I'm assuming, you know, the hospitality players, be it the operators, the owners, there is more of an acceptance of the fact that the fundamentals have changed and will change. And therefore, how are we going to now look to address the new normal moving forward? And I would probably describe now the reaction, at least in this part of the world, to be much more sensible in the way they're looking at the entire crisis and coming out of the crisis.
Okay. Charles, quick question for you. What's happening to the values of hotels that are on ground leases?
Well, they will, they're being overly impacted for two reasons. First, it's just a straight question of maths, because the ground lease creates additional leverage within the financial structure of a hotel. Any decrease in profitability means is overemphasized in a ground lease structure, so a disproportionate drop in value. I think banks are probably slightly out of favor with banks right now. To the extent banks are lending, I think ground leases are probably bottom of the list, so double impact. So ground leases were once upon a time flavor of the month and the right thing to do. That's looking less the case right now.
Okay, I'm going to move off valuation for a moment and turn to transactions. You may remember that we asked our distinguished panel to vote. You've all said that there's not much transactional activity that we're able to rely on from a valuation perspective. But what's your recommendation to hotel owners in your region regarding hotel assets? Do you buy? Do you hold? Do you buy and hold? Or do you sell? Okay, let's just deal with that and see what our panel's view. Rob, why don't you kick us off?
So if you have an asset that is low in fixed costs, you're able to get through these next 6 to 9 months, good location, good brand, not problematic for your portfolio, then you certainly want to hold. Because of there being opportunities out there for picking up assets that might complement your portfolio well, that's where the buy comes in, because this is a great opportunity to pick up an asset that might be 20 or 25% off of 2019 value. And so it's a matter of really looking at that portfolio, seeing what might not fit in quite right, what might have some costs that you can't cash flow as well out of, or manage yourself out of, and then look at those assets that might be just that perfect opportunity to fill out your portfolio.
Terrific. Hock, from your perspective, buy, hold, buy and hold, sell, do nothing?
It really depends on where that asset is. Is it a city, choice location? If it's really a choice location, just as Rod said, it's unlikely you will sell it. But what I want to bring up is that, in Asia Pacific, there are short leases as well. So particularly for those that are on short leases, you might really want to consider a sale if cash flows are really impacting, because as you can see, we are looking at sort of 3 to 4 years before things kind of come back to the 18 and 19 levels, and then your lease really gets very much shorter. So that might be something to look at, because it could be disposed of for maybe some other alternative use as compared to lodging.
Terrific. Mandeep, from your perspective.
Clearly not a great time to sell, but of course, if your cash flows are not holding out and you have no other ways of managing your cash flows, you have no option but to sell. But other than that, I would advise everybody to hold on, because valuations will be a little depressed, reasonably depressed actually, if you sell now. So the best advice I can give hotel owners is that if you have the ability to manage your cash flows for the next 12 months, then just hold on.
Hold on to for you, Hala? Not that anything really sells in the Middle East and Africa at the moment.
That's right. I mean, it's definitely hold strategy, but I would also say buy, especially because Africa and the Middle East is still emerging and developing. There are great opportunities, and it's only expected that tourism will even develop further. So for those that are cash rich and also looking at the ownership structure in this region, there are good, not necessarily distressed, but there are still good opportunities out there to buy in other parts of North Africa and the Middle East.
Okay, and Charles, just to round up.
Yeah, I know, I agree with everything that everyone said. I mean, all I would say is that there are situations where an owner may want to sell, and I can just say that from situations that where we're marketing assets right now, and there's quite a number of those, there are way more buyers than there are sellers. Naturally today, there's a wall of money out there. And we have two, 3 deals in exclusivity. We're getting very strong traction on everything else we're marketing. So pricing, I would say pricing is, the wall of money is holding up values. Values are down, but potentially not as down as far as many would think.
Excellent.
I'll just jump in and add a little something to that. Just to double back a little bit to the valuations, that wall of money is helping also keep our discount rates in check and not really having them be as extraordinarily high as you might think that they should be. And the other thing that you want to keep in mind too is that because you're applying it to a 10-year period, and a few years down the road, you might be able to refinance and pick up some debt and normalize the asset. That too is driving our discount rates a little bit lower. And one final point, here in the Americas, our cap rates very well may be negative. And so all the more reason, because they're so abnormal right now, to really steer clear of that direct cap approach and to be leaning into that discounted cash flow. Okay.
I just want to mention at this point, we've had some 74 questions submitted by our distinguished audience today. We're starting to scratch the surface with some of them. My apologies to everybody that we're not going to deal with at least 70 out of the 74, but we will be getting back to you after this webinar in some sort of way, just to give you some response from our distinguished panelists here. I'm going to move on. One question which has cropped up, it's not on my preparation sheet, but I was reading in the paper this morning that there is quite a strong likelihood that Accor and IHG might well be looking to merge and to consolidate their resources. Do you think that there's an inbuilt appetite for consolidation of the major hotel groups out there, whether it's Accor and IHG or other parties? Do you think that that is a real positive way forward for our sector? Hala, what do you think?
I don't think it's a positive way, very frankly. I've picked up the news. I've even chatted to our colleagues at IHG. But on a personal opinion, I don't think this is something necessarily favorable.
Okay. Anybody got a positive view? Just hold your hand up. Go.
I do think that there will be consolidation in the industry. I think this is an opportunity, and people are looking at larger distribution and larger balance sheets. And therefore, there will be an opportunity to consolidate. And I think that there will be some consolidation that will happen globally. I think it's only natural for a pandemic or a disruption of this kind to bring these opportunities to play. Not that they were not on the cards even before. After the big merger happened between Starwood and Marriott, others wanted to also get the same scale. This could be a great opportunity. And I think at both the domestic and the international level, there will be some consolidation that will happen.
Okay, I'm going to move off this question unless any of our other three panelists want to jump in. Okay, a question about development. In each of your regions, what do you think is the most likely situation concerning new hotel development? What the conditions required to restart, or is there an area of your region where there is the potentially greatest opportunity? And might even we see a reduction in development costs? So let's start with Mandeep.
I do think that there will be, long-term, there will be a reduction in development costs. I think there are lessons that we've all learned from the pandemic in terms of the way hotels need to be built more efficiently, where they can be cordoned off more easily. Areas are going to get smaller. Our typical, especially in the South Asian and the Asian context, our large lobbies are going to become smaller. Our staffing ratios are going to come down considerably from what we have been accustomed to in the past. All of this is going to reduce the GFA that we typically use to build hotels in this part of the world. So capital costs are going to come down for sure. I think the challenge in the short term is going to be that banks are now not very, very fond of lending to hotels, not that they were even pre-COVID for that matter. But now there seems to be an even more, risk-averse, from the banks. So there's going to be a bit of a challenge on raising capital in the short term. But I think once the pandemic has settled and hotels have started seeing a rebound, and we see the rebound, which is bound to happen, we will see a fair amount of development coming back. Largely, it's going to be the mid-scale and the upscale where we're going to see activity in India.
Okay, I'm going to move further east, if I may, with Hock. How about the same question to you? Do you see development coming back? And if so, how long is it going to take?
I think in this part of the world, development definitely will still be on the cards. A little different from what Mandeep has said. I think development costs will go up in a sense that on a per square meter basis, it's going to go up. Whereas Mandeep was talking about smaller hotels, smaller sizes, and hence a lower development cost. But I'm just looking at for everything that's the same size, I think the cost will go up because, you have to have a different kind of design. You have to allow for, social distancing and all that kind of stuff. So I believe development costs will go up. And I think that development will still happen because in Asia, you have countries like Vietnam, you have China, Indonesia, where there's a lot of domestic travel. And you can see that given this pandemic, right, leisure travel seems to be what everybody's clamoring for. So in that sense, I think over time, there will be a need to probably build more hotels to cater to this domestic, if it's not already there.
Okay. Hock, I'm just going to move right across the Pacific and invite Rod to take the next answer to that same question?
So hotel development is part of our makeup in the hotel industry. At all points of all cycles, I've seen hotels being developed. It's just who we are. We like building hotels. We like opening hotels, and this isn't going to be any different right now. Unfortunately, we're getting through this pandemic. Next summer, 2022, 2023, things will be roaring back, knock on wood. And we need hotels. We need hotels to be built. There are leisure destinations within the United States that have blossomed with more drive-to destination that need more rooms, that will need more rooms. Those are looking favorable. Every city basically tends to grow out, and in those leading edges of that city's growth, in the new developments, in the new neighborhoods, all of those still need new hotels. So there's lots of opportunity within the Americas for continued development, emerging destinations, emerging leisure destinations within South America and Mexico. Those are also needing new rooms. And so the train is definitely slowed down in terms of construction, but still moving forward.
Okay. From a European perspective, Charles, are we of the same view here, or are we thinking perhaps that there are a lot of hotels that perhaps could be repurposed and might cease to be, as well as interest in developing?
Well, land prices will fall significantly, which is a help. But I'm not sure that's going to be enough to entice developers on a large scale, at least, to return to building hotels until the market at least settles down and finance is available. I think most hotels that are currently under construction will open. I think that I haven't seen too many hotels stop construction, but I think it's a year or two away before we see that cycle rebuilding. And I think in some markets the pipeline is potentially too big, and a rebalancing by paring back some of that new supply is actually not a bad thing.
So in your part of the world, Hala, most of the hotels are created through new builds and so forth. And I've always been amazed at how markets, particularly like where you're based in Dubai, soak up new supply, just throw the hotels and they open and they get full. Is that going to be forever and a day, or people are going to have to moderate?
Well, the chances are they will moderate in Dubai particularly, and this is our recommendation, but naturally development will continue, especially in the GCC. And when we look at, for instance, Africa, it's had its own challenges. Development has been slow, despite the appetite for more projects in Africa. In the Middle East, what that would mean that they will revisit, and perhaps this is the biggest learning, and this is what we're already sensing and observing, what are the assets that are faring better, even in this crisis, such as the extended stay, for instance, and the budget, but also the wellness and the remote. And I think the development now is going to take slightly different shape and form to really identify what the future traveler, but development will continue. It might mean that we're just going to reassess supply and demand just to also allow for hotels to recover.
Lovely. I've reached the point where we're almost at the end of our hour, and I'm getting some signals from colleagues saying, could we carry on? As far as I'm concerned, we can carry on, but I'm very conscious that there are a number of people who've joined us who won't be able to go on past the hour. I propose that we'll just go on for another 10 minutes, if that's okay with everybody. But if you have to leave us, please don't worry. You can pick up the last few minutes of the webinar on the recording, which we will eventually send you a link to. And of course, we'll, as I said before, we'll also send out a copy of the slides that you missed from earlier, and also we'll write up these questions and provide some answers and circulate those as well. So everybody will have the benefit from that. So let's continue in our discussion. One of the big questions, and it was alluded to earlier, is that with the pandemic, corporations are having to rethink how they travel and how they deal with the cost of travel and so forth. So assuming that the pandemic eventually is over, but even as we progress towards that, to what extent do you think corporations are going to cut down on travel budgets? And this sort of a meeting is going to become the norm rather than the exception. Let's start, if I may, with Hala. Is this the sort of way people are going to want to meet in the Middle East and Africa?
Well, I mean, there's always going to be the element of the physical meeting and face-to-face, and this is not going to replace it. But my view, and this was earlier my concern, is that the corporate travel, though we know corporate travel and the habits and what we know about their behavior, is likely going to change forever. Because we also realize that there's a lot that can be done remotely. The world has changed. We've got to accept that. And the only way we can rebuild is by accepting that and quantifying. Now, the question is how much of this will be lost? I think this is the bigger challenge. There's always going to be some travel, but how much will be lost? And how are we going to be able to pick it up in other pockets of demand? But my personal view is that there's no way we're going to go back to anything like the old days of corporate and MICE travel. Even if corporations were able to spend that budget. And the bill has been quite big also. We have to acknowledge that it's going to take a couple of years for these corporations to really recover from their financial losses and to resume at the old levels.
So, Mandeep, is it a case of people having such short memories that they'll eventually get past it and the old excesses will return, or are we like this forever?
Clearly, we have short memories. Clearly, we want to travel. Clearly, the world will come back to traveling and going places. But I do tend to agree with what Hala said, that in two segments of our business, there is going to be a fairly long-term impact, if not permanent. And that is on corporate travel and on the MICE segment. I do think ultimately MICE will come back because of the sheer need for people, to meet in person in large numbers, which technology may or may not be able to deliver. But corporate travel certainly is going to be impacted over the long term. I do think we've all learned to, meet everybody and, over the virtual meetings. We've also realized the comfort of doing that and the ease of doing that. And a lot of sort of non-essential travel is going to come down for sure. And I think that's going to have a long-term impact.
And how about you, Hock?
Actually, very much as like what Hala and Mandeep has said.
We're in violent agreement, are we?
No, let me add something. I need that.
In violent disagreement.
Let's finish. Go finish, Hock.
Sorry, I lost my train of thought. Maybe Rod can go first.
Sure. So I'll jump in. I'll note that I was speaking with one of my colleagues last week, and she brought up a very good point that our industry is made up of innovators and people who are passionate about the hotel industry, and we're always looking for the next best thing. What can we do with our properties? How can we evolve them? I mean, the properties that we have today are so different than the properties that they were 20 years ago. And that won't change. So just because we may lose part of the corporate travel segment, there are new segments that are emerging. If our people are working from home, are they going to want to then go to a hotel to meet with their colleagues? Are there going to be more small meetings? You can't learn as much in a Zoom environment that you can in a small meeting environment, just turning to the person next to you and sharing about what you're learning from the instructor or from the trainer. That we all have to remember, that those human interactions are, that you can't replace those. And hotels are a beacon for that. That's what we do at a hotel. We interact with people and we learn from one another. So yes, while I do agree that some of that corporate business may not come back, we're moving into a whole new world where new business will emerge that 3 years ago we never even thought we needed to do. And so that's what I'm excited about. I'm excited that we're being led by the very best. Our hotels company CEOs are innovative, and so are the folks that work with them. And I think in 4 to 5 years, yes, our industry will look different, but it will be vibrant, profitable, exciting, and it's going to be okay.
Wonderful. Now,
And Russell, if I could just add to what Rod said briefly, when we travel less for work, people will start traveling more also for personal and leisure. And this is important. As Rod was saying, there's going to be growth in other segments because people will be less tired traveling all the time for work. So it's just about really looking at what the future is going to look like.
Okay, last word on the subject before I go to Charles. Hock?
I would just add that I've started, I've been doing a fair amount of business travel recently, attending good old-fashioned face-to-face meetings. Some of those are kind of medium-sized meetings where there's people in the room and there are people dialing in like this. And it's incredibly unsatisfactory, particularly for the people that are dialing in. Zoom works in kind of pandemic mode. It doesn't work when half the world is back at its office and back in meeting rooms. So I'm more bullish. I think there will be some impact on long distance corporate travel and MICE business, but I think people were asking the same question post 9/11. They just didn't believe the world would return, and it did. And I'm more optimistic.
Okay, I've got a couple of shortish questions, inspiring shortish answers, I hope, that we're going to finish with. So I'd like you to focus, first of all, just on one aspect of the global hotel and travel sector you think is going to be permanently and completely permanently affected post-pandemic. Okay, so tell me your one aspect of the global hotel and travel sector that's going to be permanently affected. Hock, we cut you off before. Let's start with you.
I have two actually. It's the MICE and the long haul corporate travel.
Okay. And Mandeep, preferably not MICE and corporate long haul travel.
I'm going to flip the question because the answer to that one is similar. So I'm going to flip the question and say the one segment which is going to be permanently impacted in the long term is going to be boutique leisure travel. It is going to see exponential growth.
Yeah, I didn't say it was going to be affected negatively. You can have a positive answer. Right. The more positive, the better. Hala?
I'll make it very short. I tend to agree between the two.
Oh, no.
We're going to lose some and we're going to win. I mean, that's the new reality.
Come on, be a little bit more, what's the word? Charles, take us into reality. What's going to be the biggest single change?
Well, it's probably already been said, but just another one. I think hotels have an opportunity in the restaurant space, with standalone restaurants closing all over the place right now. I think this is the chance for hotels to really step up and improve their restaurant offering,
like we did in the 1800s. Rod,
just maybe our underwriting on a stabilized basis. Maybe we'll be more considering a possible future pandemic or some kind of an economic shock, and maybe not being quite as optimistic over the very long term of the hold.
Okay, so my last question, and with that I'll finish and hand over back to my good friend Stephen. A one-word answer. I know you none of you know the meaning of one word, but let's hope. So I'm going to give you, theoretically, a significant sum of equity that I'm going to ask you to invest in the hotel sector within your region. So what type of hotel or hotels would you focus on now? Okay, would it be a branded? Would it be a chain? Would it be independent, limited, full service, urban, resort? What sort of size? So what's your one hotel or hotels going to be the subject in your region of the investment that I can give you in equity? Okay, Hock, what's your answer?
More than one word. Branded, limited, maybe 200 keys.
Okay, branded, limited service, 200 keys. Mandeep?
Luxury, boutique, 30 keys.
Okay, Hala?
Remote wellness resort.
Okay, well done. Charles?
We're marketing some pretty attractive hotels right now. I take a look at one of those.
Always put your money where your mouth is. That's what I say. And Rod?
I'd say well-branded, low fixed cost, urban, full service hotel that you can get at a 30% discount.
Okay. And with that, I'm going to bring the panel to a close. Can I ask you virtually to put your hands together and join me in thanking Rod Clough, Chi Hock Yan, Hala Matashwani, Mandeep Lander, and Charles Human. And so I pass back to Stephen Rushmore. Can I say what a pleasure it has been to work with you all, and indeed for you all to have been such a distinguished audience to us this morning, this afternoon, this evening, and good night from me.
Thank you, Russell. Thank you, Charles, Rod, Mandeep, Hala, Hawk, and the entire HVS team, support team in particular, for putting this all together. We've covered a lot of content in the past hour, excellent questions as well. And I'll just say, personally, I think the way I would answer that last question, New York City is, I think, has got a lot of long-term potential as well. That's where I would put my money right now. But hundreds of questions were asked, and clearly we didn't get to all of them, but we will follow up with you sometime. Someone at HVS over the next couple of weeks will follow up with you. And at the conclusion of this, we'll be sending you a survey. We could really appreciate it if you can just spend 2 minutes. It's not very many questions. We do very much value your input on these seminars. So please submit that. And finally, we'll also be sending everyone a link to this video recording, as well as some other supporting handout material as well. So once again, thank you for joining us. Thank you, panelists, moderators, support team. Look forward to staying in touch, and be well.